If markets had a personality today, I would say it would be Ross from Friends. Specifically that scene where it says, I'm fine, but clearly we are not fine. I mean, the US dollar, yes, it's holding steady, but if you have a look at other currency pairs like USD ZAR, the Rand is flexing like it's back in the gym with a New Year's resolution. Oil is bouncing after a 2-day drop, and the S&P 500 is doing that classic move that it's been doing the last while, where, it goes to record highs and then steps back and pretends like it meant to do exactly just that. You know, so I believe the big question today is, are markets stabilizing or just pausing long enough to read Friday's NFP report like it's this massive plot twist? FYI, if you want to join me for that, please let me know. Two ways. So either you can drop a comment and I will share the link, which just drop a comment. If you're watching the recording, just drop a comment saying NFP and I will send you the link. If you are watching this live, drop me a comment and I'll even send you an email. Or you can email me. My email is marketbrief@atfxafrica.com. That being said, for those of you who don't know me, good morning and welcome. My name is Francois. I'm your market analyst here at ATFX Africa. And as always, this session, what we're going to do is we'll go fundamentals first, then we'll do some technicals. And during it all, we will keep it professional, keep it practical, and we'll sprinkle just enough humor to make sure we don't take ourselves too seriously, even when the market does, you know? So I think let's start at home today. Let's start with USD ZAR. Now, the South African Rand extended its rally towards 16 Rand 30 to the dollar. Traders, do you know how crazy this is? Just starting off there. And this is specifically its strongest level since early August 2022. And the big driver in the data is clear. The massive surge in gold prices, supported by rising geopolitical tension after the US military action in Venezuela. And if we have a look at that key geopolitical backdrop, so if you don't know yet, obviously the US captured the Venezuela president over the weekend on drug trafficking charges. The US president said Venezuela would be placed under temporary US control, with the implementation still unclear. Traders also weighed the potential for similar intervention threatened by the US president in Colombia, Mexico, Cuba, Iran, and Greenland. Now, this has kept geopolitical risk relatively elevated, and that risk headline environment tends to matter for a currency like the ZAR, especially when safe haven dynamics are pushing metal prices higher. Additionally, for South Africa, there are also some longer run support points, such as, last year the Rand gained more than 10% versus the US dollar. It ranked among the best performing emerging market currencies. And this was obviously driven by quite a few factors, such as dollar weakness, improved state finances in South Africa, a lower inflation target, higher commodity prices. So all of this attributed to a stronger rand. Now, on the US side of the story, it's relatively interesting too. I mean, the dollar index held around 98.7 after two straight sessions of gains. And this was specifically as investors digested mixed US data and reassessed the Fed outlook. Now, job openings, which we received yesterday, so that was JOLTS, fell more than expected in November. ADP, which was our private payroll growth, rebounded but less than anticipated in December. We also saw ISM services showed an unexpected improvement. Now, based on all of this, markets are still pricing nearly a 90% probability that the Fed keeps rates unchanged at the upcoming meeting, while still anticipating multiple rate cuts later this year. So, in essence, USD ZAR is caught between a domestic supported Rand narrative boosted by commodities and prior structural improvements, and a dollar that's holding firm but in a policy environment where markets still expect easing later in the year. Okay. Again, if there's any questions from your end, please feel free to pop it for me into the Q&A section. Now, looking at the charts here today, USDs are obviously pushed down to that 1630 level that we spoke about and then rebounded to where it's now trading at 16 Rand 47. And that means for the morning, it's up around 0.2%. Now, over the past month, however, the Rand has strengthened 3.4%. And over the last 12 months, nearly 13%. Now, if we do have a look, our next primary resistance, which is probably what we need to look at the most at the moment, is this 1670 general area sitting right above here. And then we have the resistance above, which is this area here around 1690. Now, we can obviously see here that, yes, we are still trading, and I'm going to go to a slightly higher time frame. We're still trading in this larger descending channel, and we've been in this descending channel since last year, April. Now, within this descending channel, there is also this smaller channel that we can see here. Okay. Now, again, from here, this would actually be a very nice reversal point if we can get a break of structure out of the 1650 level, a little bit of a retest. That could give us a nice little opportunity back up to this 1670 to 1680 level, which is the resistance area that we broke around the 19th of December. Now, speaking about December, obviously during December, we also had a look at another trade setup before we all took a bit of a break. We looked at this on a 30-minute time frame. And we discussed if we get the break of structure here at 1670, that we could potentially aim for these levels here at around 1640 to 1635. Now, obviously, here you can see we got that nice clear break here on the 23rd. By that time, I was already on my December holiday, so no more lives. But obviously you can see that break took place. We got a nice little retest, and then from there, this trade actually played out quite nicely. So that was a relatively nice setup that we obviously discussed during last year's sessions. Now, looking here at this lower time frame again, you can see here we are starting to get a little bit of a momentum shift on the lower time frames. So again, only if price action permits and we get a break above the channel and then a little bit of a retest, we can start aiming for those higher levels that we just discussed around this 1670 to 1680. However, there is also the downside potential on this. So again, from where we are now, if this breaks this general structure, gets a bit of a retest, we could see another small intraday setup potentially coming back to retest this 1635 area down here. Now, based on what we are seeing at the moment, I believe the question here is, if the Rand is at multi-year strength, do we see calm or caution coming up? Or does volatility return the moment the US NFP data forces a broader dollar repricing? I would love to hear from you based on this. So please pop your thoughts on this into the Q&A section and let's have a bit of a discussion surrounding that. I do see we already have one comment here from Robert. Robert stating, hello all. I still believe the USDZR is aiming for that over enthusiastic 16 Rand to the dollar level, LOL. Well, that narrative, like we said just now, can definitely still play out. I mean, if we get, even on an intraday level, if we get a nice little, sorry, let me just mark this as done. If we get a nice little break at on this trend line where we are sitting now, and we get a bit of a retest, there is a potential for and I would basically wait for a nice little entry around, I would say 1644. So that would be around here. And this will provide you with a relatively tight stop. You could potentially aim not too far, maybe just to the end of the support level, which is around a 1.5 to 1 risk to reward ratio. And then, yes, I mean, looking at the setup at the moment, even if we just look at an extension of the smaller channel that we are discussing, I mean, that's a potential push down to lower levels here around 1620. Like that definitely opens the position for that. I mean, that gives you almost a 1 to 1, 1 to 3 risk to reward ratio. Now, if we're looking at higher time frames, again, that relatively lines up with the bottom of the channel here. So this would be a very, very strong level to break if we break below 1620. So, Robert, I hear you on the psychological 16 and, everything in me kind of wants to agree with you, but, you know, just breaking such strong structure, um, it would be relatively difficult. I mean, like I said, the structure has been running for almost a year. It's very strong, and you can see in that regard, it hasn't really got the momentum at this point in stage, in my opinion, obviously, to break a lot lower. And personally, I think if we break 1620, lower levels come into play. I think way past 16. I mean, even if we go here to a much, much higher time frame, if we break 1620 and we break this actual structure, it breaks all these support points. You can see here that support sitting 1620, 1620, 1620. This has been such a critical area where if that would give way, that literally pushes markets to aim for this 1540 to 1530 rand to the dollar. So I mean that literally opens up so much more downside scope, especially if we are looking at higher time frames. So it will definitely be very, very interesting to see what happens should we break those specific levels. And again, this is why I love when you guys interact, because it opens up these type of conversations. So again, just obviously recapping, there is two potential setups here at the moment. There is obviously, if we get a little bit of a break of structure, retest, there's potential downside back to the bottom of the channel. Or alternatively, if we break higher out of this smaller downward channel, we could potentially come and retest the resistance here at 1670 to 80, or even potentially here at 1690. Okay. Beautiful. If there's any additional questions, please feel free to ask. We have so many people here today, and a lot of you are very, very quiet. Okay. We can't do quiet. We need to interact. We need a little bit more outspoken people. Come on. I know you guys can. However, next up for today from my side is WTI crude oil. Now, WTI crude is back above $56 a barrel after a 2-day decline. And the fundamental driver is, again, you know, all tied to the US action involving Venezuela. I mean, adding on to that, Washington has outlined plans now to take long-term control over Venezuela's crude sales, stating with the release of stored oil, then supervise sales of future production. And US authorities also intensified sanctions enforcement by seizing additional Venezuelan linked oil tankers. And I mean, the US president stated Venezuela would transfer between 30 to 50 million barrels of crude to the US. And all of this, this move is seen as adding supply to the world's largest consumer. Then comes the inventory piece. We got EIA data that showed US crude inventories fell by 3.8 million barrels last week, defying expectations for a build. But, you know, if we look at the same, sorry, my chair's bothering me here at the moment. Let me just fix that. There we go. Uh, where was I? Um, but, stocks at Cushing also rose, and gasoline and distillates inventories increased well above forecast. So, again, mixed signals that we are getting here from the actual reports that we are looking at. So the oil market, in essence, is juggling two forces. There is a supply narrative risk and policy control dynamics linked to Venezuela, plus a supportive crude draw, even as product inventories build more than expected. And the macro overlay is also still alive. Softer US data reinforcing expectations for further Fed rate cuts, which can support that demand outlook. Now, very interesting picture if we have a look at the chart. So if we have a look here, as you can see, WTI rebounded, now trading at around 56.18 to the dollar. But bullish momentum here appears to be weakening with negative overlapping signals. I mean, yes, here on a lower on some lower time frames, we can see stochastics is, for instance, here pointing now at overbought, but oversold on that area. But I mean, if we go up to the daily, it's still very much in downward momentum. And even if we have a look at this general trend, it's just creating lower highs, lower lows. Lower highs, lower lows, lower lows, lower highs the entire time. Just having that momentum pushing down and just continuing on that downward slope, potentially even pushing back down to that 54.6 level even. And I mean, again, just focusing on momentum, that downside pressure persists, in my opinion, because of, even if we look at our EMAs, we are currently trading below all the major EMAs. So you can see there below my 21, my 100, my 200. And again, not showing any clear conviction to break higher just yet. Now, for me, the primary bearish trend dominates in the short term, confining price to a relative limited corrective range, which is, between this 55, let's call it, up to about, I would say, 59 range that we can probably see it trading in at the moment. So, in other words, we are seeing a rebound, little bit bouncing on that support at the moment, but not a full personality change. Okay. However, let me know from your end, is this little bounce that we are seeing now the start of stabilization, or simply crude taking a breather before the next headline resets the tone and pushes it even lower. Let me know your thoughts. Plus, if there's any additional instruments you would like me to look at, please let me know. And I will gladly share my analysis on that front with you as well. If there is nothing from your end, I'm going to move over to stocks for today. I will keep an eye on that Q&A section just to see if there's anything. Wait there. Oh, shucks. I actually see there was more comments coming through from Robert saying, I can understand what you are saying. Thank you. I'm assuming that refers back to the comments regarding ZAR. I also agree with your analysis on that. Okay, perfect. I appreciate that. Let me just see. Okay. Perfect. There we go. So, stocks. Sorry, I lost my train of thoughts there for a while. Now, today specifically, I wanted to talk about the S&P 500. Now, looking at the S&P 500, the tone is best described as mixed but not melting. Okay. So US stock futures relatively steadied after major averages ended mixed as investors processed new economic data. Now, during our regular session yesterday, we saw the Dow fall, 0.9%. S&P actually, and this was the crazy part for me. I mean, S&P went and made new all-time highs during the earlier part of the day. So during the UK session. But during the US session, it actually fell 0.3%. NASDAQ was the only one who ended up higher, which was up around 0.15 to 0.2%. And this was obviously specifically supported by tech rally, more specifically Alphabet, so Google, that had about a 2.5% rally. Now, what weighed on the broader market is cyclical sectors typically sensitive to economic softening, including industrials, materials, financials. And obviously, that macro backdrop mirrors what we discussed earlier. I mean, as we said, jobs showed up and had a sharp drop in jobs openings. ADP had that modest little rebound, but again, not what was expected. ISM services PMI surprised to the upside. And now we see all focus is shifting to tomorrow's NFP report because ultimately markets are trying to answer one big question. Is the labor market cooling gradually or faster than expected? And that feeds straight into expectations for the Fed, where markets are pricing in a high chance of a hold at the end of the next meeting, while still anticipating multiple cuts later this year. So, again, share your thoughts on this with me. I would really love to hear it. Looking at the charts, though, US 500, so that's obviously that's S&P 500, but the ticker is just US 500. Uh Fell this morning and it fell hard. At one point we were trading below 6,900 after getting those all-time highs yesterday. So I mean, just this morning we are down about 0.3% earlier when I looked. Let's see where we are at the moment. So if we have a look, I think we closed around here last night. Yeah, right there. This was the last candle was there. So I mean, even from where we are trading at the moment, we are down about 0.2%. And at one point, like I said, it was 0.3%. Now, yes, the index reached an all-time high yesterday here at 6,966. So technically, framing is relatively straightforward. The S&P has pulled back from record closing highs as it does normally, and price is hovering below those recent peak zones. But the market tone looks like profit taking and positioning, if I can put it in such a way, and not really a dramatic repricing just yet, at least based on the data that we are seeing right now. And I mean, if we have a look, yes, support is very firm, I think, at the moment here at 6,900, with a lower support around this 6,820 level. Now, near-term resistance is just under that peak break that we saw yesterday, which is sitting here around 6,945. So looking at this even from a lower time frame, when trading at all-time highs, especially trading on as a scalp trader, I find it difficult sometimes to buy at all-time highs. Okay. Again, for me, it goes all about safety. So if we do break above the peak, so that's 6,965, that would be a proper break of structure for me, and I'll be happy to enter into a position potentially aiming for a new higher high to be formed, which, I mean, if we can look at price trajectory, would probably be close to that psychological 7,000 level. Okay. But again, that only happens if price goes and breaks above this actual all-time high. Other than that, looking at the charts here at the moment, personally, I see some more profit taking, some more movement downwards. Potentially, and this is where I would be very comfortable getting back into the market, is if we get back down to the support level here at 6,820. Again, obviously, not just buying at that level, but waiting for price action to confirm a change of character and then that move higher with a bit of a retest. And that would obviously be a much safer entry, to take us back and potentially even go make new all-time highs for S&P, and who knows, maybe even achieve that 7,000 psychological level. Again, I would love to hear your thoughts on this. When, so for instance, as a question here, when the index pulls back from record highs like it's doing at the moment, in your opinion, is it healthy digestion, or is it the start of something more cautious ahead of NFP? Do you think there could be larger pullbacks? Again, would love to hear your thoughts on this. And I do see I have quite a few people sharing their thoughts on this. So one comment stating here, I believe oil will go down just a little before climbing up again. So obviously oil going down a little, that means there is again, that's that possibility maybe for a retest of the support, maybe here at 54.90, 54.80 cents, and then a potential bounce higher would make for a nice double bottom pattern to form. So yes, that would be a relatively good area to look for some opportunities on oil. Absolutely. Um, Another comment, could S&P do a consolidation phase perhaps, then start climbing again? That is also 100% possible. Just take into consideration that S&P's consolidation phases are normally on much lower time frames. You So I would drop it down to like a 30, maybe even a 15 minutes. Again, primarily because that's where I'm comfortable trading. So yes, we could probably see some consolidation here around the 6,930, probably to this 6,895, that general area. There could be some consolidation probably today, maybe even leading in tomorrow's NFP report, and then a breakout and a nice push higher. That is definitely a possibility, and a fantastic comment on that end. And definitely something to look at going into tomorrow's NFP report. So yes, definitely agree on with you on that end. Okay. Anything else, traders? If not, we've been going for just over 30 minutes. I think we're gonna start wrapping things up for today, so that you guys can get back to looking at your charts and taking the information that we shared today and hopefully applying it to your charts to make more informed decisions. Okay. So that being said, as we close out today, in my opinion, these are some of the things we need to keep an eye on. So we obviously discussed USDs. So big question there. Does the Rand hold onto these multi-year highs while the dollar stays supported, or does tomorrow's NFP report change the tone? Then regarding oil, can oil build on this rebound while everything is going on with regards to the headlines surrounding Venezuela and even the inventory signals? Or is it just going to pull in the opposite direction and potentially go and form that double bottom, or maybe even go and test lower levels? And then lastly, discussing stocks, will the market stay steady, or does tomorrow's NFP force a sharper reset in expectations? And the main reason I'm keeping on bringing up tomorrow is because tomorrow is where the market stops pricing in possibilities and starts reacting to hard numbers. And if this week has taught us anything so far, it's that the market doesn't do spoilers. It prefers surprise endings. Let me just check one last time. Yes, there's one more comment. Let me quickly see here. Thank you so much again for the analysis. I love getting comments like that. It's only a pleasure. So, on that note, that wraps up your daily market brief brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Now, if you are not trading with ATFX yet, head over to atfx.com and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.